This is a message of thanks and gratitude to all you amazing Reluctant Preppers who are making Reluctant Preppers possible by supporting our mission on Patreon. With your help, we're overcoming a 75% drop in YouTube earnings because you're not standing still, but are doing something about it and taking action by going to patreon.com/reluctantpreppers and pledging to keep us on the air. Now our team is 42 patrons strong and growing, and when we reach 100 patrons, we'll start sending out tokens of gratitude as a handwritten note from your host, Dunnigan Kaiser, and an autograph signed on a U.S. Silver Eagle to one of our patrons selected at random each and every month. If you haven't yet taken the step of joining in to support Reluctant Preppers, it's so easy. Just go to patreon.com/reluctantpreppers and pledge any amount you can. You guys are awesome, and we can do this together with your help at patreon.com/reluctantpreppers. Did you know you can buy silver at spot price? Get your 10-ounce bar of silver at spot price today. Go to sdbullion.com/rp. Not only will you be buying silver without any premium, you'll also be supporting the independent media. Reluctant Preppers gets a small commission when you take advantage of this special offer, going to sdbullion.com/rp. That's sdbullion.com/rp.
If we get a real systemic crisis, then that could well lead to a catastrophe for currencies. What you then need in that event is real money to spend. And that's the whole reason, really, why people should have some gold and have some silver.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. Today with us is Alistair MacLeod. He first became a stockbroker in 1970 and is a member of the London Stock Exchange in 1974. His experience encompasses equity and bond markets, fund management, corporate finance, and investment strategies. After 27 years in these areas, he became an executive director of an offshore bank and a consultant to other offshore institutions. He is the head of research of Gold Money, and he's with us today to talk about many aspects of why gold and precious metals are important to people seeking to reduce their risk, exposure to risk, and what its major trends and factors are in the precious metals market. Welcome to Reluctant Preppers, Alistair MacLeod.
That's very much my pleasure. Thank you.
Now, I noticed on Gold Money, when looking at some of the founders and board of directors and so on of Gold Money, it looks like reading a who's who of precious metals, from James Turk, the co-founder, his son, also Eric Sprott from Sprott Asset Management. And one of the things I noticed was a statement on there about helping customers to experience gold as money. And I wonder if you could start there by talking to us about why it's important for people to break out of our current modern paradigm and instead just to understand gold or precious metals as money.
Yes, certainly. Well, anything can act as money. It's a matter of choice. I mean, you and I can deal between us and accept whatever you and I agree is money. Now, normally what governments do is they like you to accept their money, and they insist that you pay taxes in their money. So within a country's borders, nowadays, the most common money in circulation is actually produced by government. Well, the problem we have with government money is that they can increase the quantity of it at will. And this means that it is a feature of government currency, fiat currency if you like, that they tend to collapse. In fact, none have lasted very, very long. When I say very long, in the context of history, I mean, you can get a currency lasting 100 years or so, maybe 200 years or 300 years, but they all eventually die. The first currencies were actually invented by the Chinese a long time ago, I think about 800 AD, 900 AD, something like that. And the great Genghis Khan, or Kublai Khan, his son, introduced currency, and what he wanted was everybody had to submit all their precious stones and their gold and silver, in return for which he gave paper currency, which was made out of mulberry leaves. So you can see that from Kublai Khan and Genghis Khan's point of view, he gets an awful lot of real stuff for which he just issues paper receipts. So that's really what government currency is. It's paper receipts, and it can be expanded as well, at will. The other thing, of course, is that banks create credit. Now, they create credit out of thin air, and this is a process which is not normally understood by people. But basically, if you walk into a bank and say you want to borrow $1 million, and the bank agrees to lend you $1 million, the bank doesn't hand over its money to you. No, it just opens an account and credits that account with $1 million out of nothing. And as you draw down that $1 million, it's obviously got to replace it in the form of deposits from somewhere else. Now, if it can't attract a deposit to match it, or deposits to match it, then it merely goes into the money markets and borrows the money to cover it that way. So at the end of the day, the bank balances books. But the fact is that it has created $1 million out of thin air. Now, if you or I were to do that, we would be in jail pretty quickly. The only reason banks can do it is because the government licenses them to do it. So you can see that there are two ways in which government money can be expanded. The one is the central bank prints it, and the other way is that the banks create credit by lending money to ordinary people. So this inherently is an unstable situation. And over time, of course, the quantity of money in circulation tends to grow and grow and grow. And if you add into that modern macroeconomics, which basically reckons that the cost of money should be kept as low as possible to stimulate the economy, what then happens is that low interest rates lead to the creation of even greater quantities of credit. So it is inherently an unstable situation. Gold, on the other hand, is money that grows only at the pace at which it is mined. And in very approximate terms, that's something like 1.5 to 2% per annum. And it's been like that more or less throughout history, I suppose. Well, not quite, but the thing that's interesting about it is that that rate of growth more or less matches the rate of growth of the global population. So the purchasing power of gold is inherently stable, and that's very nice. But from a government point of view, this is no good, because gold is something that you have to acquire. You can't create it out of thin air. So you can see that there's a sort of them and us situation developing between government, who want to create money out of thin air and license the banks to do it, and ordinary people who don't want their currency debased. Now, it doesn't matter too much if you and I get into that transaction and I buy something from you and I give you some money, so long as you get rid of that money very quickly, because you don't want to have it depreciating. If, on the other hand, you sell something to me and you decide you want to save the money that I've given you, then you're going to be a lot more interested in having a money which is stable and is not going to lose its purchasing power over time. And so I think what I've done is I've sort of set the scene as to what the essential difference is between precious metals, particularly gold, to a lesser degree silver, and paper currency. That is the fundamental difference. Now, we have at the moment an accelerating pace of money creation, so that the devaluation of paper currency is likely, I say likely because many factors affect prices, is likely to accelerate over the next 5 to 10 years. Now, if that actually happens, then the purchasing power of gold remains stable. Gold will emerge as the better money, and you will find that you'll tend to spend gold or save gold and get rid of the paper. And the price of gold will go up relative to paper. Now, this is already happening in Asia. This is why the Asians are so keen on gold and silver. I can remember when I first went to India, which was in about 1965, the price of an ounce of gold rendered into jewelry was roughly 160 rupees an ounce. Today, it is closer to 80,000 rupees an ounce. So that you can see that for the average Indian, having a bank account and leaving his money on deposit in rupees, he has lost relative to actually putting his savings into gold. Now, the Indians know this, and this is why they do like gold so much. As far as they're concerned, it is the family pension pot. They acquire gold when it comes to special events. You've got Diwali, which is an annual festival, which we've just had. You have marriages, you have betrothals, you have children, and so on and so forth. And these are all occasions when gold is bought in the form of jewelry. And turning gold into jewelry in India is it's a 10% cost or something like that. It's very low cost. And turning that into jewelry, it is acquired and accumulated by the family so that they've got this nest egg. And that is terribly important. And it's very cohesive for Indian society. And it's not just India. If you were in Turkey, you would have found that the lira suddenly lost 6 noughts. 1 million lira became 1 lira back in 2004. And why was that? The reason for that was that they had year after year of 100% inflation. I remember first dealing in Turkish stocks back in the early 1980s, and it was quite amazing, really. The inflation at that time was 89%. It continued at that sort of pace for quite a long period of time. The current government changed things a little bit. But you can see how this impoverishes people. I mean, if you had 1 million lira and suddenly it turns into 1, I mean, that's the degree of impoverishment you've had from just pure savings if you'd held those in Turkish lira. And not surprisingly, gold is very much a feature of commerce in Turkey. So that's, that's, if you like, the whole raison d'etre. And that's now leading to geopolitical involvement, if you like, in gold, because the Chinese and the Indians and the Russians and the Iranians and the Turks and all the rest of it, the whole of Asia, are quietly acquiring physical gold. At the same time, we sophisticated guys in the West are quietly disposing of it. Why? Because we think we've learned to think how stock markets work, you see. So what happens is you will buy into something which is on a rising trend and you sell into something that's on a falling trend. You don't value anything anymore. You just look at the trend. And if the trend in gold is down, then basically you sell your gold. And that's basically what's been happening. Nobody's been thinking in the advanced economies at all. We have got used to doing without gold. We have forgotten its fundamental role. But meanwhile, the demand for Asia has more than absorbed all the mine supply. It has absorbed all the loose stock. If I call it loose bullion, if you like, bullion which is sort of shaken out from discontented owners in the West, and the result is that there is very little bullion around at the moment. So, one way and another, if you look at the investment prospects for gold on a value basis, is probably pretty good. But that's not really why I recommend people buy gold. I recommend people buy gold and silver, for that matter, on the basis that if we get a real systemic crisis, then that could well lead to a catastrophe for currencies. Maybe not all currencies, it could be all currencies. I mean, this could be an event which we've never seen before. I'm not saying it's going to happen, but I'm saying there's a risk it's going to happen. What you then need in that event is real money to spend. And that's the whole reason, really, why people should have some gold and have some silver.
Now, what are some of the trends and factors that you've mentioned, these different cultural dynamics, and you've mentioned this hemispheric shift of investment versus divestment from the West to the East into gold. But what trends and factors what signals should they watch for in the precious metals market that would tell them we may be nearing or have reached a turning point in that?
It's very difficult to know, quite honestly. People apply technical analysis. I mean, I've done technical analysis in the past with varying degrees of success. But really, if you understand price theory, what prices really are, what drives them, the one thing that you discover is that tomorrow's price cannot be known. Nobody knows what the price is tomorrow. As an investor, you're thinking, shall I sell my dollars in order to buy some gold? In other words, I'm looking to make a profit by buying gold in dollars, so that when I buy gold today, I'm looking forward to selling it at some stage in the future for dollars, and that will be my profit. Now that's, a straightforward investment rationale. That's fine. But we're talking about something different here. We're talking about having what you might call an insurance policy against the politicians really screwing it up. In terms of what else to watch, I think all you have to do is to try and watch the political and economic situation. And I think the important thing is to educate yourself about economics, not the economics they teach at university. It's Keynesian macroeconomics that has got us into this difficulty. Really, the only way to understand it is Austrian economics, which is, if you like, sound a prioristic theory, economic theory, not mathematics, because mathematics and ratios and all the rest of it assumes that there is a constant factor in prices. There isn't. As I said earlier, tomorrow's prices we do not know. We can guess, and that's about it. I mean, they've been trying to guess these things for millennia, like opening the entrails of a goat to see what, how propitious the future is. I mean, it doesn't tell you anything, but we believe it does. We like to think we can find something out. The truth is we really do not know. But the best thing I can recommend is have a clear objective as to why you're going to have some gold and silver. Work out how much you will need of gold and silver. And that is a balanced decision, and only you can take it. Don't go to an investment advisor and say, what should I do? You've got to think that fundamentally. Then timing comes in, I suppose. The important thing is at least to have the insurance. You can top up the insurance on falling prices, and you might be able to spend a little bit of your gold and silver from rising prices. But I think that's the way I would look at it, and I would really discourage people from trying to double guess the market, because there's some very big players out there with very, very entrenched vested interests, and they will kill you if you try and trade it. I mean, they really will. It's the shortest route to penury, trying to trade gold and silver in these markets.
In that answering that question at the individual family's level of what is the right amount for them of precious metals to be as part of their savings, what kind of factors do you see that are practical that they should consider when making that decision?
Well, it depends, the degree of your insurance. I mean, just imagine that the banks go bust, that the ATMs don't work anymore. Imagine that the currency, suddenly nobody wants dollars. Imagine that situation. Now, it's not all going to happen in one go. It's something that sort of starts happening. And as they found in Germany in 1923, it was actually a process which only accelerated very rapidly through 1923, but it had already started from just after the war, the end of the war, in 1918, 1919. So this isn't something that's going to be instantaneous, but that means that you've got to survive for a period of time as things deteriorate. Not only that, but it's going to be a little while after things have deteriorated before any normality returns. Normality will return quite quickly. And here I would cite the example of Russia after the Berlin Wall fell. They had to face economic reality, and they had, I suppose, a very nasty 18 months, and that was about it. Now, that compares with governments interfering. We've had a pretty nasty time from the Lehman crisis, and here we still are at zero interest rates, robbing savers with artificially low interest rates. Businesses that should have gone bust are still supported by, guess who? You and I, through our taxes. So once things really do go wrong, if government can't intervene anymore, the change will be quite quick. So really, you're looking at putting aside enough savings, I would say, to keep going in today's terms for probably about 6 months. And remember, the other thing is that if if this sort of almost Armageddon scene happens, it's not just you, it's also your family, it's your very close friends. This is not, I mean, we don't wish this to happen. Believe you me, this is a very nasty situation. It was very well described to me, actually, by an American economist who is a professor at George Mason University. He told me that he was trying to persuade, I think he lived in North Virginia, somewhere like that. He was trying to persuade the state government to distribute gold, maybe silver, to the sort of local taxpayers, where they'd paid state taxes, give them a rebate. And what he wanted to do was to do this in a large enough area so that it could economically survive, if you like, by trading with having some gold and silver. And it was very interesting that here was a senior professor at a university thinking on these terms. And this was 4 or 5 years ago. I doubt if he's managed to get anywhere because, of course, you can be a lone voice, you're crying wolf and nobody listens. But it is interesting. I mean, his proposition was really quite interesting. And he put it like this. He said, look, at the moment, I can go into a baker, I can buy a loaf of bread. That's fine. If I've got no money, I can't go in and buy a loaf of bread. And if there is no money, the baker can't go to the miller and get the flour. And nor can he get it transported to his shop. So, the whole of the economy will seize up if paper currency becomes worthless. What you need under those circumstances is a substitute which works in an area which is large enough to for people to be able to divide their labor and provide the basics that everybody needs. And that, I think, is very interesting. And that, if you like, informs us how the world would be in those circumstances. I don't know if I've sort of painted a little bit of the picture, which hopefully would help your listeners sort of understand what I'm trying to get at.
Yeah, I think that 6-month guideline can help people to think about that in terms of what it would take to keep their family solvent and being able to meet their basic needs of life during a protracted difficulty like that. And as you point out, not all of our extended family members are going to be on board for this, so they might want to think about who they might need to also bring along in their lifeboat. But in that question of where to store your precious metals and what form of precious metals, why physical is so important. Could you touch on those 2 points? First, why physical precious metals are so important as opposed to paper receipts, that sort of thing, or like GLD or SLV stocks or stock equivalents. And then secondly, what are important factors people should look at when deciding how to store their precious metals safely?
Yeah, and basically the way I look at ETFs like GLD is that they are an investment media, which is not quite what we're talking about. I think I've made that distinction. It is important to have physical metal for the very simple reason that derivatives are no more than pieces of paper. And if you have derivatives, then the government can quite easily cancel those derivatives. And this becomes a risk in extremis. I mean, imagine having any piece of paper in Venezuela issued by the government there, and then you get the idea. I'm not saying that the government is going to be horribly evil or anything like that, but the government's responsibilities at a time of crisis is basically against the individual and in favor of the status quo. They will do anything for the government to survive and continue to govern, because the way they look at it, if they can't govern, then chaos will ensue. So they will take your property if it helps them further that objective. And when you have gold and silver, let's just start with gold and silver substitutes, then that is very, very easy for them to destroy. When it comes to actually owning gold and silver, silver is slightly more difficult because that's it's mainly a commercial metal nowadays. But gold is potentially a problem. And as Americans saw back in 1933-34, it was confiscated, and then the dollar was devalued. Now, that's not a situation that you want to see again, where the government confiscates it. I think it's very difficult nowadays with so much international as opposed to domestic finance and financial markets. It's very difficult for, I think, any government to introduce legislation to confiscate gold. But, it's not going to necessarily stop them trying it in extremis. So it makes sense. That's the first clue that I would give anybody. It makes sense to store your gold in a foreign jurisdiction. Now, I'm not saying that you break the law. All I'm saying is that if you are separated from the bulk of your gold or silver, then it is less easy for the government to force you to hand it over. I mean, you can just leave the country and then they can't touch you. It's as simple as that. Now, that is in extremis. It obviously also makes sense to have some gold and silver for local transactions, because obviously if you're going to store something in a foreign country, it may not be immediately accessible. And I would say that it is a store of value which will see you through the crisis and be useful to you once some normality returns. The other feature of storing gold and silver in physical form abroad is that you don't want to put it in the banking system, because again, the banks are licensed by governments, and governments can confiscate anything that the banks hold on your behalf. So this is why actually James Turk set up gold money. He wanted to offer people a facility to store their gold and silver outside the banking system, and therefore insulated from the systemic risks which even back in 2002, he saw was going to be an increasing problem over time. So I think, just to sort of sum it up, three aspects. Have enough spare change, if I can call it that, in terms of gold and silver, so that you can continue to survive if all communications break down. Store the bulk of your gold and silver outside your jurisdiction, and store it not in the banks, but in an independent vaulting arrangement, such as gold money. And we've got a few other competitors as well. So there is a choice for you.
So folks who are thinking about possible scenarios where there's breakdown of the system, they've seen unrest in Greece or in other places. They've seen private pension accounts being seized, whether it's in Cyprus or Poland, or they've seen the partial collapse of the ruble in Russia. They're not necessarily eased in thinking that there's lower risk by just moving their precious metals farther out into a different jurisdiction, unless that's a specifically stable area where there may be specific privacy protections. I mean, hasn't there been, since the Patriot Act and so on, hasn't there been a great loss of ability to have your personal financial arrangements, even if it's overseas, to be private? And aren't those other jurisdictions subject to having to cooperate with the U.S. government, that sort of thing?
Yes, you're absolutely right. I don't think anyone can turn around and claim we can store your gold and silver completely beyond the control of your government. The American government has shown a huge keenness to extract taxes from American citizens wherever they live. I wouldn't be surprised if there's a department of the IRS on the moon, quite frankly. So that undoubtedly is true. But what we try and do is we try and sort of give people the option of storing their gold and silver in different locations. So I mean we've got vaulting arrangements in London, Canada. We've got vaulting arrangements in Zurich as well, and Hong Kong, and also Singapore. Now, Singapore is a pretty independent state. I'm not saying that the American government can't lean on them and try and stop them doing business and force them to do this, that, and the other thing. But so far, I would say that the Singaporeans have very strongly resisted the sort of interference you're talking about. But there's no guarantee that won't change. And here again, the other aspect of it is information. I think that the US tax authorities or the government would need the information as to know where their citizens' assets are, or rather their nationals' assets are, that is something again which you cannot eventually prevent. I mean, we've seen that Swiss private bankers have been arrested as soon as they've gone into, as soon as they've sort of arrived in New York airport, and they get arrested and they get lent on, and eventually the bank has to sort of cough up the information. So your government are a pretty nasty lot when they want something, and we all know that. And I would not advocate, and I would certainly not want to be perceived as advocating, storage of metals abroad is a means of breaking the law. Now, I wouldn't say that at all, but all I would say is that it allows you to retain control over your own property within the law. That's the important thing. Now, I can see a situation potentially arising where my gold and silver, which I store through Gold Money, or most of it anyway, if the British government started leaning on me, then I would just fly out of the country, and then they wouldn't be able to do anything about it. So there are ways in which you can get around this problem. But the one thing we've got to be absolutely clear is that we're not talking about working outside the law. We're talking about retaining control of our assets legally, and that's the important thing.
It certainly is important to many of our families and listeners who want to find out ways that they can reduce risk to their family going forward. And if they want to find out more of your work and find out more about the services and storage options that Gold Money offers, where can they find out more?
Well, on the internet, it's goldmoney.com, www.goldmoney.com. We're based in Jersey, in the Channel Islands, not New Jersey in your part of the world. Our offices are there, and we operate from there. And the point about Jersey is that legally, it's got a very, very strong legal system. They respect property rights there. And that is very, very important to us as operators, that our customers are protected in that way. I also have my own website, which is financeandeconomics.org, O-R-G. And on there, you will find most of the stuff I write for Gold Money, but also occasionally when there's something that isn't suitable for Gold Money's site, I might publish it on Finance and Economics.
Well, we certainly appreciate you joining us here on Reluctant Preppers, Alistair, and we'd love to have you back and to delve into some of those areas of other fundamental aspects of the precious metals market, as well as current events in the real world of politics, especially because you mentioned that from those real world events are going to emerge some of the dynamics that are going to force some of people's livelihoods and lives into different directions, before which we hope that people have taken the prudent action of protecting themselves through making sure that they have a sufficient stock of real money. So thank you, Alasdair MacLeod, Head of Research for Gold Money, for joining us here on Reluctant Preppers.
That's my pleasure.